Wall Street indexes fell along with U.S. Treasury yields on Thursday on safe haven demand spurred by geopolitical worries, and the U.S. dollar rebounded after a sell-off following remarks by President Donald Trump on Wednesday was seen as an overreaction. Financial stocks were the biggest drag on the S&P 500, hurt by moves in Treasuries and as bank quarterly results showed weak loan growth. U.S. Treasury benchmark yields hit near 5-month lows as Trump's comments saying he favored low interest rates intensified a bond market rally, which was underpinned worries about potential U.S. military strikes against Syria and North Korea. Early afternoon news that a massive U.S. bomb was dropped in eastern Afghanistan added to uncertainty. Kate Warren, principal investment strategist at Edward Jones in St. Louis, said the dip in bond yields put pressure on stocks ahead of a holiday weekend in the United States. What we've seen is investors from the rest of the world putting more money in U.S. Treasuries due to geopolitical concerns, Warren said. The Dow Jones Industrial Average fell 138.61 points, or 0.67%, to 20,453.25. The S&P 500 lost 15.97 points, or 0.68%, to 2,328.96, and the Nasdaq Composite dropped 31.01 points, or 0.53%, to 5,805.15. The S&P was down more than 1% for the week. The energy sector was the index's biggest percentage decliner, led by declines in Chevron Corp and ExxonMobil Corporation. The dollar index, which tracks the greenback against a basket of 6 trade-weighted peers, was up 0.5%, following a 0.6% decline on Wednesday that was the biggest fall in 3 weeks. After hitting a 5-month low against the yen, of 108.73 yen, in Asian trading, the dollar steadied at 109.10 yen. The U.S. dollar tumbled on Wednesday after Trump told the Wall Street Journal that the greenback was getting too strong and would eventually hurt the U.S. economy. Clearly, I think, the dollar was oversold yesterday, said Peter Ng, senior currency trader at Silicon Valley Bank in Santa Clara, California. The market was very sensitive to headlines given how nervous it has become due to geopolitical risk. The yield on 10-year Treasury notes fell 14 basis points, for the biggest weekly decline since January 2016, while the gap between 2-year and 10-year yields contracted to under 103 basis points, the tightest since November 9 after Trump's presidential win. The MSCI All-World Stock Index was down 0.5%, well below its session high, ending a second week of declines. In commodities, oil prices were little changed on modest trading volume in a week in which crude benchmarks recouped more of March's losses on increased hopes world supply and demand were nearing balance. U.S. crude ended up 0.13% at $53.18 a barrel, while global benchmark Brent settled up 0.05% at $55.89. Gold was up 0.07% at $1,286.95 an ounce after hitting a 5-month high earlier in the session.